Welcome to the latest episode of The Financial Frontier. I'm your host, Patrick Camuso. We're continuing our series of conversations on the 1099 DA, which is going to be one of the most important topics for digital asset taxation as we enter 2026. And I'm excited to introduce our guest today, Wendy Walker, the VP of Regulatory Affairs at Sovos, who has a wealth of knowledge on this topic. So I'm very excited to introduce her today. Wendy, welcome onto the Financial Frontier.
Thank you very much, Patrick, for inviting me to join. I'm excited to chat today.
Absolutely, absolutely. So I know that you're doing a lot of work with the 1099 DA. From your perspective and, sort of what you're seeing with market participants, what are some of the implementation challenges that you're seeing in terms
Yeah.
of, people getting prepared to comply with this from an issuer's perspective?
Well, I think people have tended to focus on the tax logic, right? Like the basis, the broker definitions, the tax identity ish. And those are all real challenges that everyone has had all year in terms of implementing, but they are only part of the story, right? Upstream firms have had to answer some really hard questions as they're preparing to issue out the information returns this year. Who is actually a broker? How do you calculate basis when assets move on platform, off platform, into self custody, sometimes back again, right? How do you get tax grade identity data when many of these platforms were not built for collecting and validating tax information? Downstream becomes a heavy lift because you're not just generating 1099s. I always think this is, let's put some data in there and convert it to the format. This isn't just generating statements. You're building and you're getting approved for an IRS API connection. That in and of itself, like we don't do that, have never had to do that in information reporting until the new IRIS system, which is where they're building the 1099 DA. So building and getting approved for that IRS API took us almost a year to do. Filing, they've got to file a brand new form. 1099 DA is brand new. The IRS has never received this before. Some of these institutions are going to send millions, hundreds of millions of these, and it's going to have brand new validations associated with it. So I think we're going to see rejections. We're going to see corrections. We just recently saw 17 states are announcing that they are requiring the 1099 DA for 2025. Many of them still want paper. They want those DAs on paper or on mag media, or even one state I'm kind of arguing with right now wants people to type in the 1099 DA information manually on their portal.
Wow.
That, and then, yeah. And then the other thing is, as I said, they've got to distribute tens, hundreds, millions of statements. They've got to do that either electronically or they've got to print and mail to distribute those. And then last thing I think that's been a big one that I've had to really remind people is to educate their customers. That these customers, these taxpayers are going to receive that 1099 for the first time for this type of trading activity. Not everybody has heard in the news that they're going to get one yet, And so I think at that point, this whole thing stops becoming a crypto tax problem, and it starts to look like more like what a large broker or a payroll scale information reporting is, right? It has all this operational risk and control that comes with it. So yeah, a lot of challenges with implementing.
Whether, these platforms like it or not, compliance is starting to become part of their, user experience to a large degree, because when these 1099 DAs do go out, I agree with you, there needs to be a focus on communication at the taxpayer and user level to, really get them prepared in terms of their expectations. Because like you said, also, the 1099 DA, it's not going to be a perfect process, especially this first year. There's going to be informational gaps likely for that extend into many years. And, this at the end of the day is all going to come into the taxpayer's mailbox, hopefully here very, very shortly. So that kind of brings me, to one of my next questions is, from your vantage point at Sovos, how prepared are exchanges and custodians and intermediaries that do meet the definition of a broker? Because that is a whole nother topic I want to get into. How prepared are they to meet the 1099 DA filing requirements timely, or are they going to be looking for some sort of transitional relief? What are we seeing out there related to that?
I think it's interesting. I've not seen people in the industry, lobbying for transitional relief. And one thing to note, you can request extensions of time to file, but requesting extensions of time to send information to your customers is a little stickier, and the IRS gets kind of funny about that. So I think we're kind of at a no return where that's concerned, but generally speaking, it's kind of uneven is what I'm seeing. A lot of it comes down to experience in information reporting and withholding, right? There are firms that have hired experienced IRW professionals, people who've lived through large scale 1099 programs. They're just much further along. They understood early on that this, wasn't just about building a form, that they knew they had to consider federal, state, obligations here, the IRS transmission, the rejections, and so forth. Those firms, I think, are actually, yes, they're focused on execution, but they're actually really thinking a lot now about the next layer of issues like backup withholding and reporting cost basis next year. Then there's like another group that they're just getting started, if you can believe it. I had a firm which showed up last week on our doorstep who just sort of realized in the last week and a half that they are a broker and that they have this obligation. So here we are, December 18th. In that case, it was a week ago, and they've just woken up to the fact that they've got to do this. I have some who knew that they have to do it that we're working with that are struggling to identify the data that they need, right? Again, when they start later on in the process and then start trying to figure out what data components they need. And this isn't as simple as, okay, the IRS wants box 3 to say this. It doesn't say that in their system. So really being able to map that raw data that they're going to need for reporting. Some of them are still struggling with that. You can see the difference really clearly when you compare them to organizations with mature, information reporting programs. Those firms are already in their like second and third round of testing right now for 1099 for their processes here in December. But I do say there are some that we've come across that just say the IRS gave us some relief on those penalties. I think we're not going to report for this year. We're still trying to figure this out. We'll wait until next year. And that mindset is really risky. That is not what good faith was in that notice. In fact, it's very specific that you have to attempt to issue and file the 1099s. And you'd be surprised the number of folks that we've talked to that seem to think that it's probably not a big deal this year. So yeah, kind of uneven.
And that can put taxpayers in a rough position if they go ahead and file their returns and then they're getting a late 1099 DA. So, from that perspective, they should really be assessing what platforms that they have activity on and really proactively looking for this tax reporting, especially like you said, if it is somewhat of a emerging platform that maybe doesn't have as deep of a compliance back office. This is not a small undertaking. It crosses a lot of data requirements, KYC requirements, and just regulatory interpretation, as you said as well. So, there's really a lot that goes into the compliance around this. And some of these companies, like you alluded to, may be a little bit late to even need awareness around the reporting. So, it's going to be very interesting to see how this develops. I know you touched on this a bit, but can you maybe go into a little bit more detail about the state guidance around the 1099 DAs? I think this might be fairly new in terms of what came out with that. So can you touch on that a bit and sort of where we're at from the state tax perspective? What are these states that have issued guidance and what have it, and what are your expectations from that perspective?
Yeah, so I wrote an article I published on LinkedIn yesterday or the day before about this. And the reason it's so late to be publishing that article is this is kind of typical of state reporting this time of year. State reporting, the information reporting at the state level is built off of the federal requirements. So it is very natural every year for the states to wait for the IRS to release their annual changes, and then the state releases theirs. And the state is far less concerned about the industry, frankly. I'm just, to be frank, than the IRS is. And so there's not a concern when they put a new requirement out on December 15th. They don't, they expect it to be done by the next month and be filed. And so we're really used to this in information reporting. We every year, especially here at Sovos, my company is a leader in state reporting. I come from banking. I used to work in financial services, and I chose Sovos because of state reporting, right? And it's because this throughout the month of December and January, Sovos is patching state reporting updates because this is something that's constantly changing. So we've got states out there. If you've heard about this, there's the combined federal state program that the IRS has. They're not going to add the 1099 DA to that program this year. So that's kind of the first problem, right? Is that businesses sometimes use that for some of the states as a path, but this year they won't have that option. But the second thing is that there are states that just don't participate in that program. So they are going to have their own requirements. And so we've got right now 17 states that have affirmatively said, yes, we will require the 1099 DA. They might require it, because you had to file it with the IRS. They might require it only when it's reporting a certain threshold or more. They might require it only when you had to do state withholding. I mean, there are little nuances depending on every type of information return and payment that you make in the states. The 17 that have confirmed they want it, it is generally, I think it's all published in guidance at this point. I think one thing to say too, I should take a step back, Patrick, and say some people were saying, we're waiting for legislation from the states. And I kind of touched on this in my article that state legislation is not as specific as the Internal Revenue Code, right? It's much more broad with information reporting. And so it's very common to have a state say, all income has to be reported on, all 1099s have to be reported, and sort of just have a catch-all. And so there are states that we won't see them actively give guidance because it's already, they feel like in their law, and they did, some just added the form type to their specs for the year, and it's required. So 17 said yes, 17 we don't know about, and 11 have said no, they do not want it. Okay. So that's where we are. It will continue to morph over the next, few weeks, but that is kind of par for the course with information reporting.
Yeah, so that's going to be something that needs to be watched closely, and I know it's something that you're keeping an eye on. So I would encourage everyone to follow you on LinkedIn, and you're putting great information out there related to this topic and others. So another fake question that comes up with the DA, and you were touched on this a bit earlier, is what assets should be included and what assets shouldn't be included. And obviously, this has been a big year for adoption with stable coins. And, to a certain degree, stable coins are included in the 1099 DA above certain thresholds. What is your perspective on that? There's different schools of thought or different perspectives that people have on whether or not stable coins should be included. What's your thoughts on that?
I think that I've been kind of maybe not as loud about this as I should have been, but I have always said that I think it's silly that any stable coins that are pegged to fiat, we're obviously using it as currency. And I don't understand why we were still treating that as property, right? Because that's the fundamental issue here, is that the IRS is treating digital assets as property. And so therefore, regardless of the transaction, tax, rules for property apply. And I really feel like, this is, unfair to some extent. If I pay a merchant with dollars, US dollars, there is 1099K reporting or 1099 MISC or NEC reporting to that merchant. But I don't as the payer there, I don't get a 1099 because I spent my money, right? And so I just don't think that, fiat-backed stable coins that are being used purely for payments, should be included in the requirement. I will say, though, Patrick, Treasury recognizes this, right? If you look at Chapter 7 of the White House Digital Asset Report that came out in July, and this is something that I actually had the privilege of speaking with Erica Ninehouse of the Treasury about over the summer. They really do acknowledge the priority here that they need to perhaps modify the rules on the tax treatment of stable coins. particularly I think because of how the Genius Act was written, it really does call for them to write legislation. It's too bad that they didn't write it while they were doing the Genius Act, but there we are. So I do think it's on the priority guidance plan. So I think, I expect the IRS to be modifying those regs pretty soon.
Yeah, even just from, sheer amount of forms that can get filed, if we continue to see stablecoin
The
adoption,
adoption.
which obviously that's a goal, it can become untenable. So yeah, I'm interested to see where that goes, and I don't disagree.
I think one thing I was going to say, one thing too about that's interesting. I think people don't understand that this isn't just about, people always think, oh, I want to go use crypto, buy my Starbucks or whatever. It's not about using crypto to buy coffee, right? We are seeing stable coins like transform payment processing. Insurance companies are talking about adopting it for HSA payments, right? Like we're seeing this being used in a much more mainstream way. So yeah, I again really, really expect this to evolve.
Absolutely. Another big area where, there was some controversy overall when it came to, 1099 DA and, the broker definitions during the proposed and finalized regs was around the definition of a broker and whether or not it applied to non-custodial dexes. And, there was big industry pushback during the proposed period, during the comment period, and it was actually included in the finalized regs, as you know, and then it was pulled out during the Congressional Review Act. So what are your thoughts on that in terms of, what does that signal in the future? Obviously, that removes it pretty strongly, but can, in future administrations, can we see dexes get included in some form in this definition that may be different than the original form? And what is your perspective on that?
I think that two things collided there. I think speed and reality kind of collided with that situation, right? I think the custody broker rules took years for the IRS to write. We as an industry, I cannot tell you how many times we had meetings and conversations throughout the years to write those custody broker rules. And then all of a sudden the DEX rules just followed months later, right? It was far too fast for that part of the ecosystem that is much less standardized and a lot more complex than the custody side, right? And I think that speed mattered because the other thing that I don't know if other people know this, but the other thing is that the Treasury Department, the IRS, these folks are not allowed to own or invest in crypto. They rely entirely on the industry to explain to them how these systems work, right? So when that rulemaking is moving too fast, that feedback loop just breaks. And so we end up with regulations that, don't map to real world use cases. And I think that's why it collapsed under the CRA. Do I think it's going to return? Absolutely. No question in my mind. You can't, I understand people don't like that idea, but it will happen. We cannot have that amount of money transacting without some sort of, tax compliance rails built in that, just like we can't have it going without money laundering rails or other compliance, items built into it. I just think it needs to be a slower and more grounded process when we go through that again.
Absolutely. Yeah. Because there's going to be tons of questions that arise from it that to a certain degree already did. And I want to get to that in a bit, but yeah, I agree with you. It's gone for now, but we'll see what happens in the future under future administrations. This is something that can change and something that protocol operators and these dexes should be considering overall in terms of like long-term compliance preparedness.
Yeah, absolutely.
So, from your vantage point, when you're looking, say, 3 to 5 years ahead, what do you think are going to be some of the underestimated consequences of the 1099 DA? It's obviously causing a lot of structural changes behind the scenes with these digital asset platforms, and it's also going to impact how they interact with users here, very, very shortly as well. So what's your perspective on that?
I think that longer term, I think that we're going to see this mature and even out, right? I think I always try to tell people my career started a long, long time ago in information reporting, and I lived through the to be cost basis reporting. It took 5 or 6 years for that market to mature. It rolled out in phases, guidance evolved, FAQs were constantly updated. And you said this early on, brokers and CPAs argued constantly about the basis amounts that were being reported, right? Years before that market kind of finally stabilized. And I think the big difference with crypto right now is that we don't have the equivalent of transfer agent rules under 6045. And so I do think that's a big Cap A. I think that's a big change that we're going to see. In traditional securities, I'm sure you know, basis follows the asset when it moves between brokers, and then it doesn't do that with crypto yet. So reporting the DA for this year, for 2025, is arriving before all of the supporting rails are in place.
Right.
It's not, it's not a brand new paradigm in the sense that we've never done this before, right? But it is the first time I think that we're seeing the tax system trying to pull natively digital, highly portable, transaction activity into an infrastructure that's really built for centralized intermediaries. So I think we're going to see that adjust a bit here as the ecosystem matures and as we, information reporting gets more and more built into the processes.
Exactly, built into the processes too. I agree with you, because as time goes, more of this data will be in the systems, and the real challenge is the data that sits outside of the systems.
That's right.
The assets that are pre 2025, certain non-covered assets as well. But over time, a lot of this will get worked out. I do think, from a taxpayer standpoint, the basis is going to be an issue for many years to come. Even from a practitioner standpoint, there's still not even full alignment around Revenue Procedure 2024-28. So, it's going to be really interesting to see where that goes and what the overall impact of that's going to be on the taxpayer side. And then, on the other side of things, outside of the U.S., we have CARF, we have Docket 8. How do you see the 1099 DA fitting into this global reporting architecture, or is the global architecture going to be something that kind of runs parallel to it? Or, are we going to sort of see a unified digital asset reporting standard in terms of, the tax reporting and the data associated with it?
Yeah, no, I think we're definitely going to see some fragmentation. I think it's going to be similar to what we see in TradFi, where, the U.S. has their Foreign Account Tax Compliance Act. They have their 1099 regime, but then other countries have CRS, DAC, and then their own local. I think about India right now, right? India has the TDS, the mandatory withholding on crypto sales. And, that's something that, doesn't exist in the United States, right? We don't mandatory withholding on crypto sales for our residents. I do think it's going to be fragmented. I do think US, I don't think they're going to adopt CARF wholesale. I know that they have intended to adopt, but obviously we need legislation for that. But I do think that the DA is being built, it's being built to be compatible with the global information exchange models. If you read the 1099 DA, they just came out with the W9 instructions for the requester in the last few days. So if you're an exchange requesting a W9 from a payee, they came out with some new instructions, and they do kind of emphasize some things in there around integration with existing exchange pipelines. So I think that we're going to see a bit of shift there, meaning as we're collecting tax information on the Form W9, that information will be used for CARF purposes. So I think we're going to see a little bit of integration into the ecosystem there. But having said that, my experience has been that I described for you earlier the state complexity that we're seeing. I don't think we should think of this as any different, right? The countries and the way the CRS or the CARF gets adopted, it to me is very similar to how states may or may not adopt the 1099 DA, right?
That's a great analogy. Yeah. You're not going to get uniformity at the global level if we're not going to see it at the state levels. There's going to be some fragmentation, but I agree that the 1099 DA is really the start of these platforms building just like the base level data architecture in terms of collecting this information and having some sort of reporting standard. So it's going to be easier for them in the future to, stand up these systems for international reporting and even possibly state reporting as well.
Hopefully.
So yeah, hopefully. Well, it'll be a process that I know you'll be deeply involved in. And
We are in there.
so, it's interesting where all this is going. I know you follow this closely. You were probably following the Senate hearings on digital asset taxation a few months ago. And, one thing that briefly came up in there was using on-chain proofs as a future model for tax compliance. And I think it's very interesting. It's at the intersection of, a lot of different considerations and debates. From your vantage point, is a system like that viable? What needs to change if that is to be viable? And like what is like a realistic perspective in terms of like timeframes on like when you can actually see something like that?
I think it's actually a fantastic idea. I think it is far more efficient from a processing standpoint. I think that the tools all exist out there to make something like that happen. I unfortunately think it just doesn't match reality right now at the government level, right? The IRS runs on over 900 different mainframe systems, legacy systems. And with that, right, they're processing, I always like, it's like an outside looking in, like on the left side of a process flow is where the return data coming in, and there's 4, 5, 6 systems that are taking in income tax information returns. But then from there, they've got to take that data and it's feeding down into all of those hundreds of mainframe legacy systems. And those systems rely on identity, elections, aggregation, enforcement workflows that just don't exist on chain today, right? And so you add chronic underfunding of the IRS, and there's really no realistic path to a generational rebuild here. Again, the IRS receives over 5 billion information returns every year, right? And there are industries that are filing millions and millions that have nothing to do with crypto. And so I think that's the thing we have to remember is it is a really fantastic idea, and I would love it if we can get there. I just don't think it's an operational roadmap for the near future with the way the funding and just general overall viewpoint of the IRS has been from our lawmakers in the last.
And the priorities, like ultimately right now, like you said, there's so many different filing systems that go into the overall tax system, and the 1099 DA is designed to fit in with that. Even if, there are more efficient ways, like for the time being, it's going to have to get fit into this system. I do agree with you that it's an extremely interesting concept, and I'm interested to see where it goes in the future. But for the time being, prepare to receive your 1099 DAs. I wouldn't disagree there. But I think, that shows kind of where some of the future of on-chain tax compliance go in the far future. We kind of already seen, DEXs getting included, at least, initially in the definition of a broker. And this brings up a reoccurring issue or debate or problem that has to be solved, and that's on-chain identity, right? And it ties into all different forms of tax reporting, some even that I don't even think there's been a heavy focus on yet, like sales taxes and other considerations like that may come up in the future as we start to see more on-chain commerce. But the problem is that regulators need verified counterparties, and to do that, they need some form of identity for most forms of tax compliance. And obviously, there's the industry has a strong desire to maintain privacy, especially when it comes to their on-chain activity and their wallet addresses. So, what long term, how do you see that getting reconciled in the future? Because I don't believe it's going to be, an all or nothing. And if you do, I'd be interested to hear that too. But I do believe there's going to have to be some sort of middle ground where
I think under the US system, though, I think TINs are foundational. Tax ID numbers are foundational. And it isn't just the IRS, right? If you want to get benefits from Social Security, the Social Security Administration uses your TIN for determining your benefit eligibility, right? I mean, just as one example, the states rely on them for income taxes and withholding. So I don't think this is a crypto issue. I think it's how the US government, as well, the federal government and the state government, identify people across their systems. Other countries use federated IDs or biometrics, and those models can work, right? But the United States hasn't funded or legislated for that kind of system. And so where I do see movement is when tax is collected, not whether identity exists, right? And like I said, India's, recording or requiring that withholding at time of sale. Same with VAT and e-invoicing. Those systems in the VAT world, that's all happening in real time. And so, this idea of having to collect tins and, go and file returns after the fact and have all of that data is in the VAT system, right? None of that occurs. And so I do think that, if we could get to where we were using more federated IDs and not tax ID numbers or other ways to identify people, then those models could work. But, just coming from financial services, the legacy systems the banks use rely on tax ID numbers, the insurance companies, so it isn't just governments. So yeah, I think I think we get there, but I think we would have to have, really funding and legislation to support that kind of system.
Yeah, it's an extremely long road, and crypto's getting embedded into these legacy financial systems, and it's something that's not easy to budge, just due to the nature of them, and for better or for worse, because they're the systems that are sustaining us right now too. So you wouldn't necessarily want to change them all in one day either. But I think this has been such an interesting discussion, Wendy, and it's going to be an interesting year as these 1099 DAs are coming out. I think there's going to be a lot of developments around this, just in the news, at the state level, even at the federal level. So I'd love to have you back on as a guest to give some updates as we start to see what's happening out here on the ground in the marketplace during Q1. But I really appreciate your time here today. Now, if anyone wants to get in contact with you, either you individually or Sovos as well, what is the best way to reach out to you and discuss some of their tax questions, or just connect in general?
Yeah, I mean, well, anybody can email me. I'm wendy.walker@sovos.com. That's pretty easy, but you can message me on LinkedIn as well. I'm pretty active on LinkedIn all the time. If you're just looking for somebody from Sovos and you're thinking, yeah, I need to go and talk with them about solutions, info@sovos.com. Pretty easy.
Awesome. Well, I would encourage everybody, if you took value from this episode today, go ahead and follow Wendy on LinkedIn. She provides great updates on there on the 1099 DA and other informational reporting topics. So a lot of great information there. To everybody that's been watching, I hope that, you took some value from this episode, and that you're getting yourself and your clients prepared for the 1099 DA. And Wendy, I want to thank you again for coming on as a guest. Until next time, I'm Patrick Camuso, signing off.